This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney. The top stories this hour. Risk appetite getting crushed by renewed anxiety over AI's impact on companies, combined with fresh tariff uncertainty. Bonds and gold are gaining. A bearish research report on potential AI scenarios hitting shares of delivery, payments and software companies. IBM is tumbling the most in 25 years, with Anthropic flagging a coding modernisation tool. And President Trump warns nations not to play games with tariffs as the EU freezes the ratification process for its US trade deal.
Yeah, take a look at how we're setting up for the Asia market opens, with China finally coming back from a 9-day Lunar New Year break. During that time, the MSCI China gained more than 1%. We had also a little bit of strength for the offshore yuan, which is holding at that 688 level. And also Japan coming back from a long weekend, and we can see Nikkei futures under a little bit of pressure, down 0.6%. We had a stronger Japanese yen against the US dollar in the overnight session, so we're below that 155 level. And really, even last week, we had this risk-off sentiment around all of the geopolitical tensions around Iran. We're still waiting for those conversations between Washington and Tehran also to happen later in the week. And of course, not to mention the new national security tariffs that, according to the Wall Street Journal, President Trump could be imposing on top of the 15% tariffs already threatened over the weekend. So, Haidi, welcome back. I mean, we saved the best for you to come back to this.
You know, Shery, it feels like I've been gone for 6 months and yet nothing has really changed. I take a look at the headlines. We're still talking about trade uncertainties, different trade uncertainties now. We're still talking about the AI risk, and we're still looking at geopolitical uncertainties as well, right? So I feel right back at home. It's great to be back. But let's take a look, Shery. As you mentioned, these were the overnight drivers when it comes to some of the challenges that we're expecting for the Asian session today. And it was really that rough session for US stocks overnight. The S&P sinking under that pressure of these trade tariff fears. That Citrini report looking into the potential tail risks of AI scenarios as well. We saw Amex, DoorDash, and the worst hit, down by over 6.5%. We'll talk a little bit more about IBM and that sort of idiosyncratic issue as well, down over 13%. So the question is really, we're seeing kind of this momentum-driven meltdown in some of these sectors, and whether that will now kind of progress into more of the broader sectors of this market as well. Take a look at what we're seeing in terms of, on the other hand, well, we are still seeing that haven demand into treasuries, perhaps a little bit ironic. We have that US-derived tariff risk, but the haven's still being sought when it comes to US bonds, as well as the dollar edging higher after some earlier losses as well. Gold, of course, also continuing to gain after a run of weekly wins, and we're seeing that precious metal, of course, cheaper as a result of the moves in the dollar as well. Let's take a look at that IBM meltdown, though. Let's bring our Asia Tech correspondent, Annabelle Jewellers, who joins us out of Hong Kong. And Belle, what do we know about this, the sort of technical specifics of what was driving this sell-off?
Yeah, it was a really significant hit. You said 13% there, and that was the move we saw intraday. It's actually the biggest drop or the biggest loss for the company, going all the way back to the dot-com era of October 2000. So it really just speaks to the amount of fear. And we've seen this in software stocks across the board this year, but IBM has been hit specifically because of this announcement that Anthropic made. And what they're saying is that essentially its Claude Code tool, which is one of its ones that's been developed for enterprise customers, can actually modernize Cobol. Now, Cobol, just to give sort of the technicals on this side, it's a computer programming language. It's been around actually all the way back to 1959. It's really essential for transactions in finance, banking, government. It's used in around 90% or thought to be used in around 90% of Fortune 500 companies. So that just speaks to the significance and the integration of this computer programming language, rather. But Anthropic is saying that its Claude Code tool can actually help modernize that. And this is what really sparked the fear, because, of course, the broader fear we've seen around software stocks this year from Anthropic's releases has been essentially that these revenue streams and these recurrent revenue streams that we've seen could actually be tested. And IBM actually still makes a pretty big chunk of its revenue from its mainframe business. And so that, again, being able to modernize this system, it's something that would have once required an army of consultants. Anthropic is now saying it can do it just in a very short amount of time.
Yeah, and Anthropic also making waves by taking aim at 3 of China's best-known AI models. What do we know?
Yeah, this has been another accusation of using distillation techniques. We'll get into distillation techniques in a moment, but essentially it's DeepSeek, Minimax and Moonshot that are in the firing line. DeepSeek, of course, we know. Minimax is one of the AI companies that listed at the beginning of this year, and Moonshot is one that's actually still held privately. But these are the companies in focus. Distillation techniques, this is essentially a type of model compression. So you're talking about a small, compact sort of student model that's essentially trained on that larger teacher model. And so Anthropic is saying these companies violated its terms of service by generating more than 16 million exchanges in total with its Claude models using thousands of fraudulent accounts. Now, if that sounds familiar, this sort of accusation of using distillation techniques, it's because it is. Actually, OpenAI was warning lawmakers early this month that DeepSeek, again, had used these distillation techniques as part of an ongoing effort to sort of free ride off the strength of its own models. So it is a concern. It's a concern that we also see within Washington, for instance. The AI czar, David Sachs, has also expressed concerns about DeepSeek using these techniques. But Anthropic is saying that right now, these campaigns are actually growing in intensity and also in sophistication.
Yeah, Annabelle Druller's there as we continue to watch everything around the AI disruption fears. We're also watching the latest headlines around trade. The Wall Street Journal now reporting that the Trump administration is considering new national security tariffs on industries such as large-scale batteries and power grid and telecom equipment. Let's bring in Bloomberg Politics editor Laura Davison. Laura, and this would be supposedly on top of the 15% tariffs already announced by President Trump.
Yes, this is the first little glimpse in how exactly Trump can kind of take these next steps on tariffs. He has to rely on some sort of a different portion of the law. So there's two sections. Right here, he's relying on 232. That's an important number to remember. That's national security concerns. There's another bucket of tariffs he can levy. That's on dealing with unfair trade practices. That's 301. We're going to be hearing a lot about that in the coming days. But it's important to note these things he's considering levying tariffs on, according to the Wall Street Journal, are much more industrial products. Things like pipe fittings, telecom equipment, energy grid equipment. So he's much more limited in what he can make the case for national security. You know, this is not going to be levies on French wine and luxury handbags, for example. He also has to go through a process here. There has to be a report. There has to be a finding. So any of the, other countries, other companies who are making these products to be imported into the U.S. have a little bit of time to react before these levies would go into effect, sometime weeks or months down the line.
We've already seen that reaction amidst the lack of certainty on the new trade tariffs, right, from the EU, the freezing of the ratification process, and the EU pointing out that this is not what was in the agreement.
Yes, we are almost in a situation where we have like hour by hour, day by day tariff and trade policy playing out in real time. Trump, started with a 10% levy. He increased that to 15% for countries that had lower than 15% levies on some of their goods. They're now finding out that they are worse off and trying to figure out how exactly they want to move forward. Trump essentially is sort of acknowledging he has a little bit of a weaker hand here. He took to Truth Social yesterday and he warned other countries to not play games with some of these tariff deals. The reality is, though, is that the Supreme Court invalidated some of those deals, at least portions of them. And so every country is redoing the math, refiguring out exactly where they stand. And when they have deals that are in progress, the EU and India are two prime examples, they're making the calculation that it's better for them to hit the pause button, figure out what's going to happen, because these 15% tariffs are only in place for 150 days. That's just about 5 months. So that's a lot. It gives companies and countries a lot of time to figure out what this step may be.
And Laura, as we head towards the head of the State of the Union address by President Trump, give us some of the implications for domestic politics, especially at a time when we still don't have any clarity on what will happen to the tariff refunds or how that would proceed as well.
Yeah, there is no clarity at all on how these refunds will work. The Supreme Court kicked that back down to lower courts. But we're already starting to see members of Congress, particularly Democrats, who are calling for these tariff refunds. We have a Senate candidate in Ohio who's asking for all the money that was collected to be for tariffs, instead of having that go back to companies, having it go back to voters. A check of more than $1,300 to all Americans. So this is very much a live issue as members of Congress are running for Congress. Republicans are also also worried. This is an election that's going to be about cost of living and affordability. Trump's tariffs policies have not been popular among voters. So in some ways, the Supreme Court decision is a little bit of a blessing in disguise as they're able to perhaps distance themselves a little bit from Trump's tariff policies.
Laura Davis, our Bloomberg Politics editor there with the latest. And coming up on the Asia trade, Moneta and OCBC giving us their investment outlooks with AI trade risks clearly in focus. Lotus Asset Management will be previewing today's reopening of the mainland Chinese markets. We'll also be asking the Australian Chamber of Commerce and Industry about the impact of Trump's higher tariff rate on the country. Much more ahead. This is Bloomberg.
Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
We'll take a look after what was really a challenging session for US stocks overnight, largely on account of some of these payments firms with that Citrini report really throwing some concern over the potential tail risks of AI into the mix. Of course, there is still the overlaid uncertainty over trade there as well. This is a setup, though. We are looking like perhaps a little bit of a separate start when it comes to Sydney stocks, up by 0.3% when it comes to the intraday. We'll see how much pressure there is there. Chicago Nikkei futures are looking relatively unchanged, but those are some of the biggest losers that we see on that screen. IBM, of course, seeing the biggest, or worst day, I should say, tumbling the most, over 13% since 2020. Let's take a look at the wash-up of all of this with Aoifinn Devitt, who's a Managing Director for Global Wealth at Moneta. Aoifinn, really great to have you with us. So we sort of see this continuation of the momentum-driven stock reversal, right? What do you make of this in terms of how, definitely you have to navigate, given that I know that you're still looking for some of those opportunities within the AI and software spaces?
Well, it's a great question. I'm based in London, but I've been watching this blizzard going on the east coast of the US. And this is a blizzard of information, too, that we're having to cope with. And it is extraordinary that we have now had this cascade through different sectors. Remember, we started with the SAS, the software as a service sector. It moved into my sector, private wealth. There was concern around the altruist tax preparation software, disrupting that. And now we're moving into just mainstream software areas. And this is extraordinary that this basically magical thinking, a fictitious report could trigger this kind of concern. What we can see, therefore, is just how jittery markets really are, just how they're really selling first, asking questions later.
So when you talk about grid tech, picks and shovels around AI, would you be opportunistic right now, even with the high degree of uncertainty?
Yes, that has been something that we at Moneta have been focused on for the past 18 months, has been really, as you mentioned, the picks and shovels. What is not going to change as we have AI momentum come and go? What is not going to change is the demand for energy. And we know that that is essentially just rising around the world. We're looking at that coming from both renewable energy sources, traditional energy sources, and finding the picks and shovels that play into that. And then a new sector, grid tech, because that's where the uninvestment has been made. The lack of investment has been in the grids. So that we believe is sustained. It's perhaps not the momentum side of markets right now. It is more of a defensive and even value area. But we see that as being very much adjacent to the AI story, but having legs, whereas AI is going to be more volatile.
Especially if we're focusing on that infrastructure build-out, NVIDIA earnings will be so key. What will you be watching?
Yes, we're going to be looking at really the sustained demand and how NVIDIA, we know that that is going to be an outlier, that has been a market leader. It is dominating the US stock market, but a strong story of sustained demand there, and their outlook will be critical to, I think, uplift this shareholders' expectations, because they are really quite depressed right now in terms of the uncertainty around AI. So we're looking for some shoots of good news at this stage.
A lot of uncertainty also on the trade environment, of course, with President Trump potentially now, according to reports, announcing new national security tariffs on top of 15% tariffs as well. How do you factor that in when every time we have a new trade deal with the United States, it seems to change at any point?
It was interesting. Well, first, it was Bitcoin and digital assets that were the canary in the coal mine for trade uncertainties. That's long since passed because the volatility has just really enveloped the entire Bitcoin area. So now we have to look at other asset classes, risk on, which are showing signs of concern around trade. This was not the news that markets needed. It initially seemed quite good news. There could have been a rally in the US economy if some of these rebates and tariffs uncertainty was removed. Then the rearguard action by President Trump to really double down on his tariff policy, that's what seems to have thrown markets off today. But remember, we're looking at uncertainty from many different areas. Private credit, too, is having a difficult spell right now. And this really just does underscore how much the markets were priced for perfection up to now. The resilient economy has confounded expectations over and over again. And now we can find cracks everywhere. And that's what markets, I think, are overreacting to at present.
You're not concerned about the private market issue that you mentioned, because we have the likes of Apollo, KKR, Blackstone, all investing in this infrastructure build out. And at this point, the uncertainties, of course, as we have discussed, could actually extend to all of the investment that these people have made as well.
It's a very good point. We've been looking at the low volatility in fixed income, public fixed income markets. That has been the tight spreads that we're seeing there, the MOVE index being so subdued. It does not cohere with what we're seeing and the other jitters of markets. So where has the risk moved to within bonds? It seems to have moved into the private credit area. And now investors are waking up to that. There definitely is going to be contamination from the software arena drawback to the private credit area, given their exposures. But time and time again, we've heard that we cannot paint the entire private credit area with one brush, that it is very much a question of some firms having the pick of the crop and other firms in crowded areas with less compelling returns. So we shouldn't be too sweeping about our outlook for the private credit area. But it's true that there have perhaps been due diligence problems, which we've seen that time and time again, and that the default level will rise. But we do expect that overall private credit is quite sound. But these cockroaches that Jamie Dimon mentioned are going to start cropping up. And the question is whether markets overreact to them.
Even we have this situation where time and time again there's hits coming from usually trade uncertainty or geopolitical uncertainty, but it feels like the sort of risk and volatility response can be muted going forward. You raised the question of where that risk is going to go, right? What is your assessment of, I guess, how that volatility gets spread in the coming months?
Well, I think we have to remember that when we do have these pullbacks in markets, they're very short-lived at the moment. And that's because we do have this strong inclusion of retail investors in all markets everywhere. We know that the millennials that are priced out of the real estate market are investing like stocks like never before. Main Street is participating in Wall Street like never before. So that's on the sidelines. This huge amount of money in money market funds is on the sidelines. They are out there looking for bargains. So, and essentially, when we have spreads in fixed income as low as they are, as I mentioned, and we still have inflation ticking away in the background, nobody is making money owning bonds. So there is still strong demand for owning equities. So that's why I believe that these pullbacks will be short-lived. And that's why markets are really somewhat, apart from these momentum problems we're having just now, markets have been somewhat immune to geopolitical developments. They have been immune from domestic political developments. They don't seem to care about the large fiscal budget deficit across many developed nations because the underlying company earnings have been so compelling. So that has been the market's ability to hold two ideas at one time. Now we're seeing some jitters in that respect, but I don't believe it's fundamental.
Even Devitt, really good to have you with us. Thank you so much for your time. Managing Director for Global Wealth at Moneta, as we just discussed all of the possibilities in the markets. Given, of course, the AI disruption fears, we're now hearing from Jamie Dimon at an event talking about artificial intelligence, that they already have deployment plans for employees due to artificial intelligence, but that AI mass layoffs conversation is not really happening today. You can check out that conversation. Live Go is your function. Also, check out the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews, all our Bloomberg TV shows as well. This is Bloomberg. President Trump has pushed back on reports that the Pentagon is concerned that an extended military campaign against Iran could prove difficult. He rebutted earlier reporting, including by the Wall Street Journal, that suggested Joint Chiefs of Staff Chairman Dan Kane had been underscoring the risks of striking Iran. Let's bring in national security reporter Magdalena Del Valle. Magdalena, we know that, of course, the U.S. and Iran are headed for resuming negotiations, so this could be a lot of posturing. But what exactly has President Trump said?
Yes, I mean, as you mentioned, Trump kind of rebutted these reports that from the Wall Street Journal that the Pentagon was very worried about the possibility of strikes on Iran. And the report again suggested that the Joint Chiefs of Staff Chairman Dan Kane had been telling Trump about some of these risks. And Trump said in a post on X that the general actually believes the opposite and that the U.S. would win if it decided to strike. And the president definitely thinks his odds are pretty good, and he is getting the U.S. really ready for an attack. The country's been ready to attack for a while at this point. We currently have probably the largest U.S. military buildup in the Middle East since the 2003 invasion of Iraq, including 2 aircraft carriers, fighter jets, and refueling tankers. And on Monday, the state actually evacuated non-essential personnel from their embassy in Beirut, which could signal that there's something going on in the region. I mean, of course, state didn't mention Iran specifically, but they said that they deemed it prudent, given an analysis of the area, to tell all of these employees to leave. So this could suggest that, something's brewing in the background and strikes could be imminent.
What's at play when it comes to that decision of whether strikes happen? Are they likely? And also, is it clear what the administration or the players in the administration want out of any sort of negotiation with Tehran?
I mean, strikes are likely, but the president has repeatedly said that he would prefer a diplomatic solution to the issues with Iran. And talks are very much still ongoing. I mean, the latest round is scheduled for Thursday in Geneva, and Jared Kushner and Steve Witkoff are planning to attend. These are Trump's most trusted envoys on these issues. The only problem really is that the objective of the talks remains somewhat unclear, and different officials have different goals for what they wish would come out of them. So if it's a nuclear deal, which Trump has said he's pursuing, and which other officials say they're pursuing, then maybe a deal would be possible, and, the situation could kind of simmer down a bit. However, if, as Marco Rubio and kind of in the past Trump has also alluded to, other things are on the table, like missile program suppression of protests and support for other military groups, then maybe strikes would be the only option.
Bloomberg national security reporter Magdalena Del Valle there. Let's take a look at some of the other top global headlines that we're following. And a U.S. delegation is said to be planning to discuss nuclear weapons with Chinese representatives in Geneva. A State Department official tells Bloomberg that U.S. officials already met Russian counterparts on Monday and will meet the Chinese delegation on Tuesday. The Trump administration is trying to start a new round of arms control talks with both Moscow and Beijing. More ahead here on The Edge of Trade. This is Bloomberg. Take a look at how we're setting up when it comes to trading here in Australia. Of course, it was a challenging session for US stocks overnight, thanks on account of that rout that we saw in some of the payments companies, the likes of DoorDash, of course, Amex and IBM as well, seeing its worst tumble since 2020. But intraday, we are seeing up about 0.25% when it comes to the ASX. We are seeing that flow-on effect when it comes to haven demand for treasuries as well. The Aussie dollar looking pretty flat at the moment. We had the greenback seeing some earlier losses, but erasing some of those losses later in the session. Shares of Woodside Energy, though, this is what we're looking at and will be in focus today. The company reporting full-year net income of $2.7 billion, beating expectations. Paul Allen joins us now with more. And to what degree do we see the weakness in oil and gas prices at play here?
Yeah, that's the key question, right? Because it was a beat. The headline number looks great, but that net income figure down 24% on year because of the weak oil and gas prices. It didn't matter to the dividend. That's still 59 cents, better than expected, representing an 80% payout ratio. So, Woodside's still very much loved by shareholders. Going forward, though, the message is just steady as she goes, really. The plan for 2026, ramp up the Beaumont low-carbon ammonia project. This is the cornerstone of the strategy to expand into cleaner new energy markets. Also, the Scarborough project in Western Australia, that's seen delivering its first cargo in the fourth quarter of this year, so that's on track. And the Trion project in the Gulf of Mexico, that's going to deliver its first oil in 2028. There's also discussions of a potential sale ongoing for another stake in the Louisiana gas plant as well. So it's stick with the plan. Don't worry about the gas prices. Just keep on keeping on.
And we had the exit of Meg O'Neill last year, right? So how is the search for a new CEO going, and what could this mean for this year?
Yeah, search ongoing. There's a recruiter involved. We're probably going to get an announcement next month, but who knows? The front runner for the role, of course, the acting CEO, Liz Westcott. But whoever takes on the job is going to inherit this environment of very weak demand. We've still got the situation where demand in China is weak. Japan looking to restart a number of nuclear reactors. OPEC Plus, of course, keeping on boosting its output as well. So this is the scenario that Liz Westcott or any other new CEO is going to inherit. And Bloomberg Intelligence does see a small risk around that. New leadership could mean a pivot, so perhaps some uncertainty being priced in, but we're certainly not seeing that today. Woodside shares up pretty strongly right now, 1.4%, and better than 15% just this year. So, no worries about the weak oil price.
Bloomberg's Paul Allen there with the latest on Woodside. As we continue to check oil prices, of course, holding steady in early session today. And this, of course, after a little bit of a spike on geopolitical tensions around Iran. We're still waiting for clarity from those negotiations, which are set to resume this week. We continue to see rising tensions, a potential U.S. strike. For more, let's bring in Steven Sapchinsky, who leads our Asia energy coverage. Steve, so what are you seeing in the latest oil moves?
I mean, it's really a pretty boring market over the last few days. I think last week we saw prices really starting to rise up as there was expectation. And there were reports elsewhere that the U.S. might do some limited strikes on Iran. That didn't happen over the weekend. And instead, we got a move to look to talks continuing on Thursday. So prices kind of steady as they go. They are still a bit higher than they were a few weeks back. So we are seeing this risk premium being built into the prices. At the same time, I think the world, or rather traders, need to deal with a world where geopolitics is also a bit more confused, given the Supreme Court's decision on Friday, late Friday, to get rid of Trump's unilateral tariff threat. With that, the future of trade deals are in question. What Trump will do, 10% tariff to 15% sweeping tariff against all countries, will that hold past the 150-day period? Will Trump try anything else? That could potentially be bearish for prices if there is an impact on global trade and reduction in economic output from certain countries. They'll be consuming less oil. So there's a lot of different things to digest. And what's interesting is we're not really looking at the fundamentals. And the fundamentals for oil, which is where you look at supply and demand, the market is oversupplied. And we're going into a 2026 where OPEC Plus is potentially going to increase output. You've got Chinese demand maybe not living up to where we thought it would be a few years back. And you have shale oil output still quite strong, near a record high. So with all, and other producers from Africa and other countries are also increasing output. Venezuela maybe could add more barrels onto the water as well, with the current situation maybe stabilizing. So if you look at the picture on the ground, prices should likely go lower. But the risk premium for everything happening has kind of pushed things higher.
Gold is not going lower, though. Do you think this time around there's enough structural, longer-term support factors for gold to sustain this rally?
I think the thing that you have to look at for gold is Trump. Can you predict what Trump is going to do? And the question is, no, you can't predict what he's going to do. It's a very challenging situation. You're not sure if he's going to slap new tariffs on something, if he's going to create a fight with the Supreme Court. And with all of this instability, especially with the dollar weakening, where do you park your money? And traders and economists and analysts are saying gold is likely the best bet there.
We'll be watching the price of gold, also silver, along with other metals. Steven Sapczynski, good to have you with us. He leads our Asia energy coverage. And some other stories from the latest corporate front. Bloomberg's been told that Paramount Skydance has raised its offer to buy Warner Brothers Discovery. Sources say the new bid improves on Paramount's $30 a share proposal made back in December and addresses some concerns around financing. If the Warner Brothers board decides the new offer is superior to its current agreement to sell assets to Netflix, the streaming giant will have 4 days to respond. PayPal shares gained as Bloomberg revealed it's said to be attracting takeover interest from potential buyers. Sources say that digital payments pioneer has held meetings with banks following unsolicited interest from suitors. We're told at least one large rival is exploring a bid for the entire company. PayPal shares had lost around 45% in the past year. Bank of America says misinformation weighing on Blue Owl Capital and the private credit industry presents an attractive buying opportunity. Bank analysts say the firm has solid to strong investment performance across all of its strategies. Blue Owl last week shut the gates on one of its funds, preventing investors from withdrawing their cash, and began selling assets to return investor capital. United Overseas Bank reported fourth quarter profit that narrowly missed analyst estimates as the income declined from lending, trading, and investments. Net income fell to $1.1 billion in the fourth quarter. CEO Wee Chung says fee growth for the year will be a high single-digit percentage. Singapore's banks are enjoying a bonanza in wealth fees even as they face declines in lending income. We have more ahead on the Asia trade. This is Bloomberg.
There is still more to come. Snow is projected to linger through the afternoon, with another 1.5 to 2.5 inches expected by 8 p.m. Wind gusts are expected to remain as high as 40 miles per hour into the evening. New York remains in a state of emergency. The travel ban has ended today at noon, but a hazardous travel advisory remains in place through midnight tonight.
New York City Mayor Zohran Mamdani there speaking after reopening roads and bridges to non-essential traffic as snow continues to fall. Well, the winter storm has knocked out power to 600,000 homes and businesses across the northeast and grounded more than 10,000 flights. Let's bring in Bloomberg's weather reporter Lauren Rosenthal for more. So, Lauren, give us an idea of the severity of these outages and the travel delays that we're seeing still.
Yeah, pretty significant delays that will last into the week. I think for a lot of Northeast cities, this was the most severe storm they've seen in several years. I think there haven't been warnings like this to this extent in about a decade in some places. Amtrak, the national rail operator, has said that it will not be, supplying train service between Boston and New York, major hubs, until at least tomorrow morning, and we'll reassess. But I think we can expect to see flight cancellations and difficulties with ground travel last well into the week.
I mean, my family in New York, so exhausted with all of the snow this year. They've been shoveling snow every few hours. But we know that this has been a problem for the whole city of New York, right? How are they dealing with this time around? I remember the last snowstorm, it took weeks for them to be able to even clear out the snow that was everywhere just.
Yeah, and that's partly because temperatures in the city stayed cold for days and weeks after that last big storm at the end of January. Luckily, this time around, temperatures are going to be significantly milder. They will be above freezing, and we will start to see, the heaps of plowed snow melting away a little bit later into the week. There are a few other storm systems on the horizon that could drop up to an inch of snow and potentially some slushy rain. But for the most part, the remainder of the week should allow us a bit of a reprieve and a chance for some of the snow to melt.
So what's happening right now in New York? I mean, or the rest of the Northeast? I lived in New York for the past decade, and I haven't seen something as severe as this year.
Yeah, this has been a notably snowy winter. Forecasters have been telling us all day. Winters like this do happen when we talk about a seasonal average. It includes years with substantial snow like we've seen this winter and years that are milder as we've seen for the past few years here in New York. Looking ahead, there is a possibility of another potentially significant storm early next week. It's too soon to know the details, but I think it's safe to say that winter is not over in the Northeast. We could still see more snowfall. At this point, though, we are well above our seasonal averages for winter in many parts of the Northeast.
Oh, I'm headed to New York next week, and this is just exhausting to hear. Lauren Rosenthal, great to have you with us, Bloomberg's weather reporter there with an update on that snowstorm hitting New York and the rest of the Northeast. BMO Financial Group CEO Darryl White not surprised by the muted market reaction that followed the Supreme Court decision to strike down President Trump's tariffs. He tells Bloomberg that many of their corporate clients have adjusted to the swings in trade policy under the Trump administration.
I think it's early days. I mean, the announcement's a couple of days old on Aoifinn. If you look at the market reaction, it's been pretty subdued, as we've all been talking about this morning. I think part of that is because some of the outcome that we saw over the last few days was probably priced into bond markets, so we haven't seen much of a reaction there. And if you talk to most of the corporates that we're dealing with, the reality is over the course of the last year or so, the instability and the volatility that's been brought by various decisions over the course of the last year on tariffs have become a little bit more normal course. So in the meantime, they've rebuilt supply chains or organized themselves in different ways to have resiliency in how they think about dealing to surprise, or maybe not such a surprise, as the case may be, depending on the audience. So in the meantime, more stable than you might think.
How much do you hear also a discussion around domestic production and expediting some of the licensing around getting, say, for example, the copper mine in Arizona up and running at a time when there is this priority on metals of all sorts?
Yeah, that's a live conversation. I mean, I think it's a very important one, because if you think about the confluence of two forces, we've got the demand being driven by the AI power up. So the newest industries are literally dependent on the oldest industries. In addition to the global order reorganizing at the same time, there's a massive demand push here. And the response to that at the end of the day is going to hit a bottleneck on the supply side. So the needed reorganization of permitting, of getting to market faster, of regulatory reform is a really active conversation. And I think, as you know, we're seeing some positive developments on that, particularly here in the United States.
BMO Financial Group CEO Darryl White there speaking with Bloomberg's Lisa Abramowitz. More ahead here on the Asia Trade. This is Bloomberg. Well, Sony CEO Hiroki Totoki says the company's expansion goals need more than bank debt, with private equity becoming central to its deal-making strategy. Speaking exclusively to Bloomberg Wall Street Week, Totoki also explained why matching the right capital resources to each business is more important than ever.
Before, we just had a limited access of the capital investment, like the debt from the bank, and also, the stock. And that's simple. But now, we have a private equity and alternative investment, and also, the private credit. And that kind of a diversification of, the capital resources is quite important, because, each capital resources have a different risk appetite, as well as a different time horizon. And as we diversify our business, and we need to acquire many asset classes, and it's we can find out the best fit of the the capital investment and asset class.
Is that why you entered a relationship with Apollo for music catalog, because you needed a long-term time horizon?
Exactly. And the music capital is relatively low risk and low return, the asset class. And that really fit to the, private credit, and needs a long time horizon as a capital. And as such, that's a great example. As such, we need a different type of asset class.
Private credit, as I understand it, is relatively new to Japan. As you say, historically, Japanese companies, as I understand, they've relied on banks.
Yeah.
Is there resistance to it in Japanese culture?
No, I don't think so, because the three mega banks have of course a lending capability, but not unlimited, because they need to acquire much more deposit now. That's a reality. And then collaborate with a private credit, enable them to provide much more credit to the outside of the company.
Sony CEO Hiroki Totoki speaking exclusively to Wall Street Week anchor David Weston. And you can find the full Japan edition of the show on our new video hub at bloomberg.com/videos. And we're coming back from a long weekend here in Japan. Markets set to reopen in a few minutes. Traders digesting fresh global trade uncertainty and AI angst. Let's bring in Japan equities reporter Alice French. And Alice, a lot has happened over the weekend, especially President Trump's new 15% tariffs, the Supreme Court striking down his previous reciprocal tariffs. What are you watching today?
Yeah, I mean, what a time to have a 3-day weekend, right? And there's definitely a lot to digest this morning, as you say. I mean, look, futures are pointing to, it looks like it might be kind of a bit of a flat open, actually. I think it's partly because, we know that Japan and the US already had this bilateral trade deal setting those tariffs at 15%. So even with this fresh threat of that global tariff from Trump, it's not actually really going to change the picture that much for Japan. And over the weekend, we did have some senior LDP representatives saying that, autos have always been kind of a priority from the Japanese side. Of course, they contribute a lot to exports here. Let's see how they respond today. Of course, I suppose the Supreme Court ruling could be a positive for those exporters, but at the same time, the kind of uncertainty that is swirling now seems to be weighing on sentiment, and the AI scare trade as well as just amplifying all of that, right?
We have a lot of tech stocks in Japan, but also the Japanese yen perhaps a little bit stronger over the weekend. And give us an indication or a reminder of what happened after Liberation Day. President Trump's tariffs or reciprocal tariffs were announced in April. What happened to the Japanese market? So that could give us an indication of what's happening this week.
Yeah, I mean, cast our minds back now. It feels like a long time ago, but not even a year ago, right? Of course, we had a huge plunge in equities with exporters kind of leading those losses, particularly the automakers there. Pharma as well had a very bad day. But surprisingly, I think for some, we bounced back very quickly, right? So, Japanese equities have ended up outperforming US equities and most other global markets in the sort of almost year that's come to pass. And I think that's partly because, a lot of Japanese companies have been able to kind of offset some of those tariff pressures by sort of manufacturing more in the States or outside of Japan, raising their prices and things like that. And earnings have actually been pretty resilient. I mean, the earnings, the quarter that we just saw, a lot of companies beating estimates and kind of showing that sign of recovery, which seems to be really helping sentiment. Now, you mentioned the yen there. Of course, strengthening in the yen, particularly if we kind of find investors searching for safe havens among this uncertainty, it is a potential risk for equities. We know that the weak yen, which ended up being a lot weaker last year, I think, than a lot of people expected, was a huge kind of upside for equities, particularly the exporters. And so there is a risk there that if we do see more strengthening in the yen, it could weigh on the equities too.
How do I see the AI scare trade kind of continuing to play out for Japan?
Yeah, I mean, let's see what happens today, right? I know, of course, overnight there were quite a lot of worries around sort of payments and delivery. We may see that kind of playing into things like Rakuten or SoftBank here today. Let's see. In terms of kind of overall software jitters, we've definitely seen them playing out here. Companies like NEC, Hitachi have seen their stocks hit. We saw kind of delivery stocks like Yamato as well really being hit by those worries around that karaoke company that sort of announced this new AI model a couple of of weeks ago, I have sort of heard people on the ground here saying that perhaps, Japanese stocks might be slightly more actually insulated than others, partly because there is a language barrier there. Any sort of AI models that come in, of course, will have to provide for the domestic market, will have to be created in Japanese language too. Perhaps that's going to mean that the fallout will be sort of slightly further out than for kind of English-speaking markets. But certainly the concerns are there, and it seems to be that, software is really becoming sort of a bellwether for the whole kind of AI risk trade, right? And let's see whether we do get a rebound and how quick it comes. I think that will really speak to sort of the impact on the wider market. But the sentiment, for sure, there's a lot of caution. There are a lot of jitters. We know that we've seen these kind of AI-related companies, SoftBank is a big one, underperforming in recent months.
Our Japan equities reporter Alice French here with a look ahead of what to be watching for the market opens here in Japan after the long weekend. And you just heard her, a lot of the software-related stocks, tech stocks, also exporters, given, of course, the latest news around trade, tariffs. But, of course, we have also heard from the Wall Street Journal about potentially new national security tariffs coming from President Trump as well. Take a look at how futures are trading at the moment, because we had seen already the downside pressure in the previous session on Friday for the Japanese equity markets, given the concerns around the geopolitical tensions between the U.S. and Iran. We have those negotiations ongoing this week, and what that means also for the price of oil, for energy prices as well. And you can see the downside of about 0.2%. Do watch out for the JGB space as well, because Japan has a whole different idiosyncratic story when it comes, of course, to Prime Minister Takaichi's spending plans. We are going to get Tokyo CPI numbers out on Friday as well. And you can see U.S. futures pointing to some upside, Haidi, at a time when we continue to digest the latest around tech, the latest around that potentially what's been called a halo, Haidi, heavy asset, low obsolescence, AI immunity trade.
We keep coming up with these new acronyms, right? It's interesting, I think, Shery, taking a look at the trading action so far in Australia, because that Sydney session, you see upside of about 0.3% at one point. Very idiosyncratic, away from those tech-heavy, software-heavy names, although there are, of course, some listed here. But we are really seeing a session that's being driven by the miners. Woodside on the rise there, some other big miners, the top gainers there, lifting revenue forecasts with some of these names, Viva Energy as well, some infrastructure names also on the back of some positive earnings results as well. So it isn't all being driven by the AI angst, if you will, but certainly that will be a major theme going into the market opens in Seoul and Tokyo, which are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after renewed fears over AI disruption swept markets overnight. Of course, we're also watching the latest trade announcement, tariff announcements coming from the Trump administration, not to mention, Haidi, also geopolitical tensions around Iran. So what a time for you to get back. Welcome back.
Thank you very much. It's nice to be back, and it's also nice to kind of see that a lot changes, and yet nothing much changes at all when it comes to thematics for these markets, right, Shery? And we're also looking ahead to the State of the Union, so watching out for any commentary from President Trump on trade tariffs, on geopolitics in the Middle East that could throw yet more uncertainty into this mix.
Yeah, I mean, we've been talking about tariffs for the longest time, right, during the entire Trump administration, and yet the form and shape and the levels perhaps changing a little bit. So we're going to try to get more clarity on reports also that he might be implementing new national security tariffs on top of the 15% tariffs announced over the weekend. And, of course, that will all play into the Japanese market reopen after the long weekend. We had seen already downside pressure last week on that risk-off sentiment around the geopolitical tensions on Iran, and those negotiations continuing. You can see early in the session the Nikkei is down 0.1%. So do watch out for those exporters. Also, the tech trade, right? Anything around semiconductor, software investments, SoftBank, Rakuten, for example, given, of course, the fears around artificial intelligence disruption. The Japanese yen has been a little bit stronger this week, but not by much. We're still hovering around the 155 level, and do watch out the JGB space, because we have seen a little bit of a boost after some relief from Prime Minister Takaichi's spending plans, and perhaps investors thinking that she will be more really structured when it comes to those fiscal plans. Take a look at how Korea is also opening, because we were already at record highs. The Kospi has been at record highs for the longest time, and perhaps if there's one thing that has changed since Haidi last anchored on our shows was that the Kospi has almost doubled or so. The Kosdaq, you can see right there, continuing to gain ground, and we're still seeing some upside. The Korean won a little bit of weakness, 14.44.
What hasn't changed, though, Shery, is still, of course, this haven demand when it comes to US Treasury, despite, of course, the trade uncertainty coming from the very own US administration. We are still seeing that safety play being quite attractive when it comes to buying in Treasuries. But it's very interesting. We could expect to see further yield steepening as well across the curve when it comes to what we're seeing at the moment, given that there could be a struggle, according to JP Morgan rate strategists, to replace the previous tariffs with these new ones. So much of this remains yet to be seen, and hence why we're seeing a great lack of clarity in these markets. But let's try and dissect this a little bit more. Joining us out of Singapore is Vasu Menon, who's a Managing Director for Investment Strategy at OCBC. Vasu, really great to have you with us. So other than yet more uncertainty and sort of waiting on the next news headline, how are you positioning amidst all of this?
Well, you know, we are telling our clients to watch what's unfolding very carefully. But we have the template from last year when Trump imposed reciprocal tariffs, and we saw the markets pull back sharply, and then the markets rebounded once we had greater clarity. So we are of the view that, you know, in terms of fundamentals, there's still a reason to invest in the markets. Economic growth is resilient, lots of liquidity on the sidelines. Earnings growth has been resilient and pretty good. So if you focus on the fundamentals and take away the noise, then there's still a case for investing for the medium term. And this is exactly what we're telling our clients. We're telling them not to panic, to watch the situation. You could see the markets pull back intermittently, and some of it could be quite sharp, depending on how things unfold in the US, and that could actually present a buying opportunity if you take a view that, you know, the medium-term outlook remains sanguine.
One of your arguments is that US economy remains on pretty good footing, but that is predicated on sustained spending on AI. Does the AI scare trade worry you somewhat when it comes to how solid that thesis is?
Well, it does. You know, we are keeping a close eye on that as well. That is unfolding. You know, and initially the markets were worried about whether, you know, the AI capex spending would yield productivity gains and return on capital. But now we've shifted to, you know, AI creating disruption to the real economy. So that fear is going to linger for a while. It's not going to go away anytime soon. AI is a new technology. It's normal for this to happen. We've not turned negative on AI. We still think that it's a super trend. It's a long-term trend. It'll play out quite well over the next 5 to 10 years, but you need the patience and the appetite for risk. But in the meantime, what you see happening is also that, you know, investors are rotating out of technology stocks, AI stocks, into other sectors of the economy. So the non-tech sectors in the US and elsewhere have actually benefited from the AI scare. So there are still opportunities despite what's happening with the AI scare. And we don't think that the AI scare marks the end, you know, the AI era. It is normal for this to happen because ChatGPT was launched in 2022. That's the beginning of, you know, the AI cycle. It's only been about 2-3 years, and typically, you know, technology cycles last 10-15 years. So if you have the patience, long-term vision, I think, you know, still we are positive in the AI sector.
How do you get exposure to the AI sector over in Asia? Because, of course, when you're talking about the likes of ChatGPT, getting these publicly listed companies that actually delve into LLMs, that's a whole different issue. And we have a couple over in China with Minimax and Jipu, right? Is that a market that is attractive?
Indeed. You know, I mean, I think there are opportunities in Asia, and you've seen money flow into Chinese AI plays. You've seen money flow into Korea, for example, where, you know, the stock market, as you mentioned just a while ago, you know, has surged on the back of chip demand. So Taiwan, Korea will benefit because of chip demand, you know, and Chinese AI plays, you know, they're benefiting as well. And so while US AI stocks have, you know, taken a breather, you know, I think you're seeing the Chinese AI companies benefit. And we are positive on the Chinese stock market. And one of the sectors that we're positive on is clearly, the internet plays, the technology plays, the AI plays in China. And so that's something to keep an eye on.
Does the dollar debasement theme also play into the optimism over Asia if you're thinking that we could see stronger capital flows just because of all of this, perhaps a little bit more aversion when it comes to U.S. assets? The dollar continues to lose ground, down about 1% already this year, at a time when we're talking about all of these trade uncertainty continuing to really hurt the narrative around America.
Without a doubt. I mean, if you look at how the markets performed in 2025, you saw the U.S. stock market underperform Asia, ex-Japan, including China, in a significant way. And what happened last year was, the dollar debased close to, 9-10% on the DXY. And we're seeing the same thing play out this year, given the uncertainties about tariffs and the potential for rate cuts and other factors that are weighing on the dollar. And once again, the beneficiary is Asia. And so our case for investing in Asia, and we're positive on Asia, ex-Japan, our case for investing in Asia is partly premised on a weaker dollar. But of course, the other factors in favor of Asia as well, the valuation story favors Asia, the earnings growth. And now, with Trump, pursuing tariffs, I think one of the beneficiaries of his reset in terms of tariff policy is probably going to be Asia as well. I think the effective, tariff rate for Asia will, in general, come down. So, one of the winners of Trump's reset in terms of tariffs could potentially be Asia as well. Another reason to be positive on Asia.
Vasu, Menon, always good to get your insights. Managing Director for Investment Strategy at OCBC, as we continue to watch all of those movers around that trade uncertainty that we just discussed. For example, here in Japan, we're watching Sony, Nintendo, Toyota. These are some of the companies that have really seen the effects of the higher tariffs on products going to the United States. Also, Komatsu, construction, materials, equipment, of course, very important to sort of gauge the state of the global economy. And at a time when we're still trying to digest what new 15% tariffs would mean for global markets, not to mention the potential of national security tariffs as signaled by the Wall Street Journal. Take a look at how tech stocks across Japan are also trading, because we have seen that incredible anxiety and fear in the U.S. market, with Citrini Research publishing that report on potential risks that artificial intelligence could pose. But the caveat here is that this is a scenario, right? Not necessarily a prediction, but that's already sent the likes of DoorDash, American Express, KKR, Blackstone, everything just down in the previous session. And not to mention that IBM also tumbled by the most since 2000, when Anthropic said its Claude Code can help modernize a programming language that's mainly run on IBM computers. So you can see the broad downside in these stocks around Japan. Let's actually discuss all of the latest fears around artificial intelligence and bring in our Asia tech correspondent, Annabelle Drulers. Annabelle, should we start with what's happening with IBM and how we saw that stock plunge and what's the significance of that?
Yeah, I mean, it was really the stock that was most in the crosshairs on Monday, even though you're seeing there, really, it was a host of different companies that were also in the firing line, the likes of Uber, for instance, DoorDash, just concerns generally about disruption to their business models. But IBM, I mean, it was a major move, as you said. It was the biggest drop we've seen for the business going all the way back to 2000. So you're in the dot-com era at this point, and concerns around what is a key part of its business, its revenue stream also being affected by AI. So essentially, the story here is that Anthropic has released updated capabilities for its Claude Code tool, and they're saying that they can actually modernize Cobol language. Now, Cobol, it's a type of computer programming language. It was actually developed at the end of the 50s in 1959, and it's used extensively across Fortune 500 companies. But you're talking about businesses in finance, banking, airlines, government as well as using it. So it's very, very widespread, very entrenched. Anthropic is essentially saying that its Claude Code tool can modernize that program quite easily and quickly. And the reason that they're putting forward for this, I think, is actually quite notable because they have this blog post out. You can read part of it here, but they're saying that this is a process that once upon a time, or even until now, really would have taken consultants years to map out workflows. So you're talking about large timeframes, high costs. At the same time, you've got people that understand this system, Cobol, shrinking every year because the people that, of course, developed it retired years ago. As I said, it was developed at the end of the 50s. At the same time, there's only a handful of universities that are teaching Cobol as well. So there's really just a few people that can really work on these systems. They're saying that Claude Code can do this instead and in a much shorter space of time.
Anthropic also taking aim at 3 of China's best-known AI models. What do we know about that?
Yeah, this is a really interesting one, and similar allegations we've actually just heard recently from OpenAI. But the companies here that are being affected or being called out, so there's DeepSeek, of course, we know. There's Minimax that debuted in Hong Kong on the stock exchange here just at the beginning of this year, and then also Moonshot. So those latter two ones are two of the better-known startups in China, actually the 3 of them. But essentially here, what Anthropic is saying is that they use distillation techniques. Now, distillation techniques, just to keep it very high level, but you're talking about a model compression technique where you've got a small, compact, so-called student model, you can think of it, and it's actually learning or reproducing the behavior, the performance, the knowledge of large, complex teacher models. And so Anthropic is essentially saying that these 3 companies use distillation techniques to generate 16 million exchanges in total with its Claude models, and that essentially helped them build their own models as well. And so they're saying that essentially they're using their knowledge and their expertise to get ahead here, and that is the concern. As I said, we heard from OpenAI just a few weeks ago. They were saying that DeepSeek had used distillation techniques, and a concern as well that's very much being discussed in Washington.
Annabelle Drill is there with the details on that story. More ahead on the Asia trade. This is Bloomberg.
Tonight, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
The U.S. is preparing to launch national security investigations into the impact of imports on various products, including batteries and industrial chemicals. Let's bring in Bloomberg Politics editor Laura Davison. And Laura, we have seen, of course, the Trump administration's changing and updating of their tariff regime given the U.S. Supreme Court decision. So what is this new national security tariffs that could potentially be added to the 15% already announced?
Yeah, these would be some wide-ranging tariffs. The White House is suggesting that these investigations, so they have to start with an investigation before they can actually levy these tariffs, but it would look at all the U.S. major trading partners. What the goods they're specifically looking at are largely industrial goods, so things like batteries, equipment for telecom, energy grid equipment, industrial chemicals. So this is kind of the universe of things they can look at using this national security tariff authority that they have. It's much more difficult to have wide-ranging tariffs on things, including some consumer goods or things like, French wines or luxury handbags. Probably harder to make a national security case there. So the White House is really, day by day figuring out exactly what it wants to do next. This investigation process could take several weeks or months before those tariffs would go into effect. The U.S. is also able to look at unfair trade practices, another section of trade law that allows them to levy tariffs on other countries that they think are, using unfair subsidies or, also things like digital taxes that target U.S. countries or other ways that they're using. So there's a lot of moving pieces here, all as there's this midnight deadline for the new global tariff to go in. Trump has said that will be 15%. We're waiting to get some official confirmation from the White House that that will be that 15% rate versus the 10% that Trump initially announced on Friday.
As you say, he's sort of digging in to try and keep his tariff regime intact, right? How much flexibility does he have to do so with this court decision? And we're seeing trading partners already, freezing processes in trade pacts because they don't know what's coming next.
he has a lot less flexibility than he did just a couple, 4 or 5 days ago. With the court striking down his ability to just sort of willy-nilly impose tariffs here and there, he now has to have a little bit more process. There have to be investigations before the tariffs can go into effect. He's also a little bit more constrained on what types of goods he can target. It has to be either for national security or trade practice reasons. He can't just say all goods from a certain country are going to be hit by a tariff, except for this in the short term. So this 10 or 15% tariff that goes into effect at midnight will be in effect for 150 days, but then will expire. So he's just constrained both on the types of goods, the length that the tariff can go into effect, and how quickly he can move.
And we're, of course, looking ahead to the State of the Union address by the president. And I remember last year, for example, he shook the hands of the Chief Justice. What are we expecting this week?
This will be a really highly watched State of the Union. Members of Congress have been away since this Supreme Court decision came down. They left Washington last, having voted in the House, really rebuking tariffs, rebuking Trump over his Canada tariffs. So this is a really a strong moment for them all to gather again. We're expecting the president will really tout his economic agenda, his tax law, but most closely we'll be watching what he says both on tariffs and Iran and future plans there. The whole world is really watching to see how strident of a tone he'll take, if he'll sort of stick to the script, or if he will venture off script and perhaps say things that will make Susie Wiles, his chief of staff, shake a little bit.
Laura Davison, Bloomberg Politics editor, as we head towards that State of the Union address at a time, of course, when we have a lot of trade uncertainty. And this is how European futures are trading on the news as well, because in the last session, we had a lot of pressure for European equities on that trade uncertainty. You can see right now, Stocks 50 futures pointing to a little bit of upside of 0.2%. We were watching the euro very closely, was little change. But when it comes to the currency space in Europe, do keep an eye on the Swiss franc, which has seen outperformance. Some analysts calling it the most close to gold as it can get in terms of that safe haven characteristic. And of course, IT stocks, software stocks, take a look at SAP there, down almost 3%. Haidi on, of course, those concerns around the AI disruption.
Those concerns, the concerns over trade, the concerns over the Middle East, are all contributing to that search for haven still, right? You mentioned sort of gold adjacent trades. Well, we're seeing gold itself, so we're still seeing a bid over $5,200 an ounce. They're rising for a fifth day. The uncertainty over the trade policy scenario, these prolonged tensions around Iran as well, also at play. New York crude at the moment a little bit softer, but broadly steadying as we saw Donald Trump reiterating that his preference is for a nuclear deal with Iran ahead of these talks. He's also pushed back on reports that the Pentagon is concerned that an extended military campaign against Iran could prove difficult. He rebutted some earlier reporting, including by the Wall Street Journal, that suggested Joint Chiefs of Staff Chairman Dan Kane had been underscoring the risks of striking Iran. Let's bring our Bloomberg editor, Michael Heath. So, Mike, what are the options being available to the administration now? Because it's not really clear what they want out of these negotiations.
Yeah, it is, and it's interesting with President Trump rebutting that Wall Street Journal report, and the Wall Street Journal just sort of cited what I think were fairly obvious and logical, problems with a campaign against a sovereign country, and when you're doing it far from home. So I don't think there's anything potentially wrong with the reporting. They just, in any situation, you give what the upside risk and what the downside risk sort of is there, and what was set out in that journal report pretty much was the downside risk. The question really seems to revolve on if they do need to turn to military action, will it just be limited strikes to try to encourage Iran to recognise the seriousness of the US case, or do they go harder for strikes that last, maybe several weeks? I think that's sort of the debate, and the US negotiators, Steve Witkoff and Jared Kushner, who's Trump's son-in-law, they seem a bit perplexed because Iran hasn't been terribly urgent in these negotiations. They're going to talk again on Thursday, but Iran's sort of been talking about the parameters for the talks rather than even the talks themselves, and it maintains that it's not going to give up its enrichment, and there was the talk of the US maybe allowing them some token enrichment, but there just doesn't seem to have been a lot of progress made there. So it's sort of, I guess it's difficult to understand from the US side what's Iran thinking there when you've got these carrier groups offshore, you've got all these bombers around, etc., and there's a lot of pressure on the country militarily potentially.
Exactly, Mike. I mean, when it comes to the optics, at least the Trump administration seems to be wanting to portray the seriousness of a potential military strike, whether it's, as you said, the largest military buildup in a couple of decades, or even the evacuation of some personnel from the U.S. Embassy in Beirut.
Yeah, I mean, look, Shery, they're definitely serious about what they're doing. As you said, they've evacuated some embassy personnel in Beirut, and all non-essential personnel are being moved out. So the strikes are certainly on the agenda and probably likely to happen. The question sort of is how Iran handles it. I mean, it has the potential to it has these proxy forces that could attack US assets in the region. There's obviously the Straits of Hormuz, whether they can start driving up the oil price by making it very difficult to bring oil in and out of the region. So they have options there. The other thing too is we're talking about a theocratic regime with a leader who's in his late 80s, who reportedly has also been naming successors, etc., in case this all goes wrong. So whether there's sort of a sense of martyrdom there as well, it's a very, very confused and complicated picture there on how Iran sees it. It certainly doesn't seem to be worrying about its civilian population. But the other thing too, and you've seen this with Israel in the past as well, if a regime or if a rebel group just survives an attack by Israel, or in this case the US, they then declare victory. If the US can't oust them with their massive military hardware, it's basically a success for the government or for the group involved. So the bar for them is a lot lower than it is for the US. So there's multiple factors going on here, and things to look at. But yeah, I mean, they don't seem to be reacting as the US anticipated, I think.
When we get it to Michael Heath there. Well, let's take a look at some of the other top global headlines that we're following. And a US delegation is said to be planning, to discuss nuclear weapons with Chinese representatives in Geneva. A State Department official tells Bloomberg that US officials already met Russian counterparts on Monday and will meet the Chinese delegation on Tuesday. The Trump administration is trying to start a new round of arms control talks with both Moscow and Beijing. A powerful winter storm has knocked out power to 600,000 homes and businesses across the U.S. Northeast, grounding more than 10,000 flights and disrupting intercity rail services. Central Park in New York City recorded about 20 inches of snow, but roads and bridges have been reopened to most traffic, and schools will resume classes on Tuesday. Forecasters say more snow may fall later this week. More ahead here on the Asia Trade. This is Bloomberg.
We're seeing a huge rally in emerging market stocks, especially around those industrial names as AI disruption fears continue. Morgan Stanley Investment Management adding to EM bets that are insulated from the AI boom. And we have seen LATAM stocks, for example, jumping over 20% in 2026 already. So we continue to watch the Avantis EM equity ETF as well, recording $429 million in new cash on Friday, its largest daily inflow since May. More ahead on the Asia Trade. This is Bloomberg. Chinese markets finally coming back after a 9-day Lunar New Year break, and we might see a little bit more of a supportive backdrop. MSCI China, for example, gaining more than 1% since the mainland Chinese markets were away on holidays. Sentiment has improved. China could be facing lower levies after the U.S. Supreme Court's decision to strike down Trump's reciprocal tariffs. But let's discuss what all of this means with Hao Hong, managing partner and CIO at Lotus Asset Management. Hao, always good to have you with us. Of course, I mentioned the positive aspect of the tariffs, but also we could see more new national security tariffs, 15% tariffs on top of that. Not to mention geopolitical tensions around Iran. What else? AI disruption fears. So what will be important for Chinese investors as we see them reopen?
Yeah, well, I think even though Trump quickly slapped on a new form of tax, I think for the Chinese exports, the overall average tariff is still down, and especially the tariff based on fentanyl and all that, those tariffs is going away for the time being. So I think, during the holiday, because today is the first day of trading, but during the holiday, we're seeing, the A50 futures and also the Chinese yuan reacting positively to the news. And also yesterday, Hong Kong had a really big day as well, big day surge as well. So one, shouldn't be surprised to see, the positive sentiment pass on to the Asia today.
How important is the AI theme in the Chinese markets, especially with the likes of Jipu, Minimax as well, that are really exposed to that LLM market?
Yeah, I think, last year this time, we saw the DeepSeek moment for the Chinese market, right? So, there was a huge rally, especially in the mainland Chinese market. The new tech board actually has been one of the best performing index last year and continue to do so year today. I think, for Chinese LLM AI companies, they are trying very hard to catching up. I think the perceived gap between U.S. and China is quickly narrowing. And also China, after the achievement in software, I think, China is ramping up on the hardware as well, so one shouldn't be surprised to see, big positive news coming up from the Chinese chip sector this year.
We've seen pretty strong numbers out of Chinese New Year. We've seen this kind of continuation of a temporary truce between the US and China. Do you think that feeds into what you said is the start of a virtuous cycle, including the repatriation of funds back into domestic investment?
Yeah, I think it's happening. Ever since last year, and if you look at the US dollar deposit in Hong Kong banking system, for example, surged a couple of $100 billion US dollars last year. And I think mainland Chinese money and mainland Chinese rich people continue to flow into the Hong Kong market. And also overseas, as you can see, last year the US dollar suffered a rather significant depreciation. I think it's actually one of the worst performing year in decades. I think the trend is continuing, and people smell the opportunity here in Asia, and in particular in China. So, money are actually coming back. So then, as you can see, last year the U.S. dollar's significant depreciation is a sign suggesting that the money is being rotated out of the U.S. market and going into Asia, in particular China. So this year, one of the major themes should be, the continuing appreciation of the Chinese yuan. It's already well past 7, and with the economic cycle continuing, and also China making progress in industrials and software sectors, I think the yuan appreciation story should continue on this year.
Yeah, it's a pretty broad-based bull case, right? The old sectors, industrial, commodities, energy, but also high tech. And I do wonder, does that include sort of specific robotics names, particularly after that very impressive viral performance in the Spring Gala?
Yeah, I think everybody watched the Spring Gala during Chinese New Year. It's one of the most watched show on earth. So I think during the show, many of the robot companies actually featured their robots on the show, dancing and doing martial arts and all that. It was very eye-catching. And soon after that, when the Hong Kong market reopened, we saw a huge surge on many of the robotic names as well. So I think China is making very good progress in robots, and also the manufacturing cost is coming down very, very fast as well. And some of the robots, simple robots, is actually available for commercial use, for family use now. So I think the progress will accelerate from here, and I think this is one of the sectors that we should be watching for in the Chinese market.
I mean, other than the exuberance around artificial intelligence, robotics, what about can that sector support the broader fundamental part of the economy? Say, as you said, manufacturing costs are coming down. Could this help with factory numbers as well? And what have you seen, or what sense are you getting from the holiday spending that could give us some indication whether consumers are starting to spend again?
Yeah, I think that is probably one of the sectors that is still lagging, in terms of economic performance. I think retail sales in the second half of last year actually decelerated, after the national consumption stimulus finished. So I think people are looking for new forms of consumption handouts, consumption coupons maybe this year after the twin sessions. I think this year the Chinese consumer names would have like some tailwinds behind it. For example, just now we discussed the appreciation of Chinese yuan, right? So it actually increased the buying power of Chinese consumers and make imports from foreign countries cheaper. Already, this Lunar New Year, we're seeing something that hasn't happened for a long time, which is that, many of our friends and relatives is actually spending the New Year holiday overseas. All right, so, probably because of the Chinese yuan and also probably because of a rather buoyant Chinese market, and people actually make money last year, and it hasn't happened for a long time. So I think, this year the positive trends would continue. I think, we're likely to see more consumption-focused stimulus after the twin session. Consumption is, one of the key policy focus for the next 5 years, for the new 5-year plan. So I think besides consumption stimulus, new forms of tax reduction and also family help assistance, retirement assistance, etc., we should be seeing more details after the twin sessions.
Hong, always great to have you with us, Managing Partner and CIO at Lotus Asset Management. Well, Black Swan author Nassim Taleb is warning investors to brace for escalating volatility and potential bankruptcies in the software sector as this AI-driven rally enters a more fragile phase. He also told us exclusively that tariffs can be effective if implemented predictably, but erratic execution discourages investment.
The tariff policy, tariffs can be a smart thing. The execution of that is completely crazy and erratic. It doesn't give you an incentive to invest. So if you know that they're going to have tariffs permanently, you go invest in the sector. We don't even have that. They can change their mind. Again, an erratic administration is not helping. And plus, the tariffs are not selected in a way to be rational because they affect a class of the population that's, it is a regressive tax, so it's going to have an effect. If it doesn't have an effect yet, eventually things will show.
On low-income consumers specifically, or just bigger economic picture?
Yeah, overall you have a shift. For more inequality, and this exacerbates it, and it's not helpful in the long run. And that shift for inequality has been exacerbated by AI.
Let's talk about AI, by the way. So we saw a huge sell-off in the stock market, driven specifically by some AI names. What is your take? What's happening?
Again, it's structural. That historically, if you look at history, the car companies, airline companies, and of course the personal computer. Okay, if you look historically, that those who started the business, the pioneers, are not necessarily the winners. As a matter of fact, they're probably more likely to be the losers. So now people take names of AI and say, okay, these are going to win, let's invest. I'm sure someone's going to make a lot of money in both software and hardware related to AI, but doesn't necessarily have to be these companies because you have a lot of instability, both technologically and, of course, in geographically with AI.
So does it mean you expect bankruptcies in, let's say, software space?
Definitely. Plus, the effect on the stock market, as you realize that the previous rally that we had was driven by a very small number of names. And now we probably have some rebroadening effects on redistribution. But a lot of the gains in the stock market, are going to be eradicated by that. So this is why you have, we're at a juncture of a lot of instabilities across many domains.
The Black Swan author Nassim Taleb speaking exclusively with Bloomberg's Natalia Nizavachev in Miami. We have more ahead on the Asia trade. This is Bloomberg.
Australia's government says it's examining all options after President Trump imposed a 15% tariff on all imports into the US. That is a 50% increase for Australia, which had previously secured a 10% levy under the old framework. That has some Aussie exporters bracing for tougher competition ahead, with tariffs coming down for many other countries as well. Australia's largest business association, the Australian Chamber of Commerce and Industry, says that while the US Supreme Court decision was expected, many businesses may still be caught out by the renewed uncertainty. Joining us now is the ACCI CEO, Andrew McKellar. Andrew, great to have you back again here on Bloomberg. What are you hearing from and also communicating to your membership at the moment?
Oh, Heidi, great to be with you. Look, obviously it is a period of uncertainty. This wasn't an entirely unexpected decision. I guess it's been one of the contingencies that has been very much factored in. The US government's reaction equally, it's not entirely surprising. We didn't expect that they would walk away from their tariff policy. The level at which it's got to be set and how that's applied now, obviously that does create uncertainty. Look, our advice to our members is to take this one step at a time. Obviously, they've got to look closely at their contract terms and provisions now, and in particular, the payment terms. So we're urging them to go and talk to their trade advisors, talk to your state or territory Chamber of Commerce, and certainly look very closely at those contract terms and provisions, so that we can understand how any change from here in tariff administration is going to impact. We're working closely with government. We're getting good advice from them. Their approach the whole way along has been very measured, obviously taking this one step at a time and playing the long game. So I think that's really the approach that we're seeking to implement with our members.
In terms of sectors and certain parts of the business community that are harder hit, or perhaps that might benefit with a diversification of trading partners, what are you seeing at the moment?
Oh, look, diversification is the key word. So we are certainly seeing that as a key area of focus across business. We did our annual trade survey late last year, and we found that I think it was 53% of exporters said that they had opened up or were actively looking at new markets to go into. In particular, that was areas like India, Southeast Asia, Vietnam, Indonesia. These were economies that were at the top of the list. More broadly, though, Australian companies are looking at diversification opportunities around the world. We're working closely with government on that.
Andrew, it seems that we have lost connection with you. That was Andrew McKellar, CEO at the Australian Chamber of Commerce and Industry, of course, with the business reaction when it comes to President Trump's tariffs. We do have more with Andrew as he joins us back. Andrew, it seems that we lost you for a second there, but are you with us right now?
Hi, yes, sorry about that, a technical hitch.
It's totally fine.
So,
continue your thoughts, and also perhaps you could expand to the fact that, you were talking about veering to other markets and how difficult and what are the biggest challenges for your members.
Yeah, look, they are looking to diversify. As I was mentioning, 53% of exporters in our national trade survey last year said that they were looking at areas like India, Southeast Asia, in particular Vietnam and Indonesia were very high on the list. I was just mentioning only a few weeks ago, I was with Trade Minister Don Farrell in Saudi Arabia, in the UAE, and Australia has just recently signed a new comprehensive economic partnership agreement with the UAE. So there's huge opportunities there. I think one of the other areas that we're currently negotiating with is, of course, the EU, and our members would be in favour of getting a good outcome on negotiations there. So there are opportunities for diversification, and certainly business in Australia is very much looking at those opportunities as a positive chance to grow trade.
Andrew, we know the Trade Minister had headed to California to support this sort of flagship economic and cultural diplomacy program, G'day Australia. I do wonder, it's interesting, we were talking about the sort of steady, level-headed, even toned approach that the government has been taking. What would you like to see in terms of deliverables and perhaps the approach this time around, given that we've now seen this sort of reversal of fortunes?
I think it's been the correct approach. It's been very much a Team Australia approach. Only yesterday morning, very quickly in response to the developments over the weekend, we had a briefing with Ambassador Rudd and the team from DFAT. So, they're taking careful stock of, what this decision means and what the administration's response means. So, look, I think one step at a time. We shouldn't panic. Australian exporters to the US will still be in about as good a position as they can be because this tariff will be additive. So we still get the benefits of the free trade agreement that we've had for many years. Of course, there will be some additional expenses and impost as a result of the changes that the administration are making. But I think, there are exemptions there. We've seen products like beef actually growing the value of their exports, given market circumstances. The Americans still need our high-quality beef, and there are exemptions there covering products like that because the administration is very concerned not to exacerbate pressure on things like food prices.
Andrew, great to have you as always. Andrew McKellar, who's the CEO of the Australian Chamber of Commerce and Industry. We do have more ahead on Australia Ahead. That's every Tuesday at 11:40 a.m. if you're watching in Sydney, 8:40 a.m. if you're catching us from Hong Kong. You can also tune in to the Bloomberg Australia podcast, delving into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead here on the Asia Trade. This is Bloomberg.
And one stock that I'm watching today, McDonald's Japan, trading at the highest level ever, gaining about 2%. They've just announced that they're raising prices on 60% of their items by 10 to 50 yen. And of course, this is important in Japan because we have seen inflationary pressures now take hold in the Japanese economy. We are getting the Tokyo CPI numbers later this Friday for an indication of national prices, which last week already showed that inflation has slowed to the slowest pace in about 2 years. But Haidi, this is after inflation has surpassed the BOJ's 2% target for more than 3.5 years.
Take a look, Shery. Of course, we've also got the return to trade when it comes to mainland China, of course. We had already 8 shares enjoying something of that return from the long break, but could that be kind of the scene of more jitters, particularly when it comes to these AI and tech-related stocks, right? The AI scare trade playing out with some of those big declines with payment companies, DoorDash and the like overnight on account of this one research report, which we'll get to a little bit more in just a moment. But FTSE A50 China futures looking like they're lagging by about 0.25%. Let's bring in more on what we're expecting. We're bracing for our China show. Co-anchor Yvonne Mann joins us now. Yvonne, so nice to see you. What are you watching out for?
So nice to see Shery back. Our producer, Brad, shout out to him for calling you guys that. Thanks for having me on the show, guys. Yes, it's
shady.
Great.
That sounds so different.
Shady.
That has a different connotation right there.
It's been too long. It's been too long that Heidi's been gone. But yes, so, Heidi's return certainly is a big thing. The return to Chinese markets is also quite interesting as well. Just given, as you mentioned, right, these AI jitters, Chinese pure plays have, largely speaking, been insulated from this scare trade that's happening on Wall Street. So are we continuing to see those national champions outperform here today? You take a look at what we saw in the A-share market on return from their holiday, and we are seeing maybe a possible catch-up in the A-share market here today. But 9 days, that is a lot of days to be away from these markets, and there's a lot that's happened, right? But it could be a positive backdrop because we saw what happened with that Supreme Court ruling, basically deeming these IEEPA tariffs are illegal. China stands to benefit, and effectively we could be seeing lower effective tariff rates. Morgan Stanley Stanley saying from 32% to 24% for China. So that certainly helped with the recovery that we saw on Monday here in Hong Kong. So that certainly could be a good thing. Also, we're tracking a lot of the consumption plays, given what we saw in some of the trends during Lunar New Year holiday. Seems like when it comes to Macau casinos, duty-free shopping, retail sales, did have some decent numbers according to CCTV, about 8.6% during that 9-day holiday. But we did see some names like China Tourism Group fall in Hong Kong yesterday. So perhaps analysts are still a little bit underwhelmed. Oil also could be a big one here, just given the situation with Iran, given that we could be seeing a catch up there in some of the oil futures in Shanghai and across the mainland today.
I mean, so much to cover. What have you guys been doing on the China show while China was away? But you do have a big guest coming up that could talk more about this AI disruption.
Yeah, it's not even about humanoid robots at the Spring Gala, right? I forgot to even mention that, right? That all these kind of comedic skits and Mando pop dancing that we saw, that certainly helped a lot of these big humanoid robot or robotics firms as well. But yes, one big guess, right? You talked about what really kind of triggered this kind of another round of this AI scare trade. It was Citrini research, right? And this sort of hypothetical sort of fiction that came out on Sunday, the author of that, at least, he's from Lotus, but he was author of this report from Citrini. Alap Shah joins us here. He was one that asked this fundamental question, right? What if the bullishness that we're seeing around AI, it turns bearish, where, everything turns out to be so good, almost too successful, that it really disrupts not just software companies, private credit, but also the economy as well. We'll talk more about that coming up.
Yeah, that's a crazy thing, right? It's not a prediction, it's actually a scenario, but that will be such an important conversation. Great to have you with us. Do stick around with Yvonne Mann and, of course, that's China show coming up. That's it from the Asia trade. Our markets coverage continues as the mainland Chinese markets come back online after the Lunar New Year holidays. This is Bloomberg.